Okay, hi everybody. It is Sunday the 9th of August. A fairly quiet week last week, and definitely one of the most difficult weeks, at least for the Forex markets. We may have lost money last week for the first time in a while, I think, for the Forex markets, and the reason was last week, the previous Friday, we had this big bullish engulfing candle on the dollar index, as you can see here. I had to take that as a buy signal. I had to take that as a bullish signal. We were severely overbought. The dollar index had fallen significantly. Although we had not hit any important support levels, I had to take it as a buy signal. Monday, fine. We rallied up, although we held the... where did we get to, in fact? Just let me remind myself. We got to... 93.99. Okay, so we got to just a little bit above the first 23.6% fib, and then we sank. Now, these bullish engulfing candles, this often happens. Well, this sometimes happens where you get this retracement and a retest, and then you get the double bottom. Now, the only good thing about what happened last week is that I'm more and more convinced now that this is a very significant buy signal for the dollar. The bullish candle followed by the double bottom. Not a massively bullish candle situation here, but still, we definitely held it. Two tests of the previous week's low, or the July low, at 92.54. We got that in the first week of August, successfully holding it. So a very clear double bottom. It would have been nice to have another bullish engulfing candle. That would have just finished it off for me, but still. And then a positive reaction on Friday. So this really does look like a very bullish setup for me. Just as the stochastics start to turn positive, we've got to try longs again in this. If you're not long already, then we have to, because this could be quite significant. I can see this getting up through 94.00 to 94.5, and 95.00 looks like a reasonable target. Now, if that holds, we might just enter into a sideways period. That's always a possibility, but we can certainly see 95.00 as a realistic target. So even if you're buying around the 93.5 level. On the open, there is a potential 150 pip profit on the dollar index. Where would your stop be? Well, it would be below 92.50. So you're looking at risking 100 to make 150. That's a reasonable punt. Hopefully, we'll have a little pullback on the open just to give us a slightly better entry point. Aussie dollar was hard to trade last week as well. We topped out just below the 200-week moving average, which is at 72.60, and I thought we would then sell off, because obviously I thought the dollar had bottomed. So in that respect I was wrong. We made a little bit, we headed a little bit higher, which, well, I could have thought was a buy signal, but as we didn't break the 200-week moving average, we didn't get any confirmation. Anyway, so I'm waffling a little bit here, but look, this isn't really even a double top, but we certainly got, is that a bearish engulfing 72.39, 72.43? Yeah, so we actually got a bearish engulfing candle on Friday. So this is an important sell signal that we've got on Friday, especially when you consider that we held the 200-week moving average almost perfectly. We actually topped out just 15 pips below it. So this looks like it's confirming significant strength in the dollar, US dollar to come, with the Australian dollar now expected to head a lot lower. New Zealand dollar versus the US dollar, slightly different pattern here than the Aussie dollar. Anyway, again, I'm going to have to consider this to be a negative. We had the bearish engulfing candle the previous Friday. This was a little bit kinder to us because, of course, we didn't break into a new high like the Aussie dollar did. But still, this looks quite negative. Obviously, the big red candle on Friday is another negative just after the previous Friday's red candle. Let me just check the weekly chart to see if there's anything important on there. Well, we do have the 61.8% fib here at 66.59, coupled with this trend line, which goes back all the way to sort of just before the middle of 2018. So it's at least a 2-year-old trend line. And as you can see, slightly tricky for us because we did poke our noses above this trend line on the weekly chart, but pulled back by the end of the week. So we've got shooting star candles here around the significant resistance area, and we've got a bearish engulfing candle on the Friday, almost a bearish engulfing candle. Yeah, it is a bearish engulfing candle on the Friday there. So I think we've got enough negative signals there to look for a significant decline in the New Zealand dollar against the US dollar. 65.30, 20 would be my first target. You can see we've got the 500-day moving average there with quite a decent fib support level. That's the target. Would I be buying there? It's entirely possible that we get a bounce off there and maybe get up to 65.90, even 66.30 and form something of a head and shoulders pattern. But anyway, let's just see what happens. If you manage to get short and we get down to here, that would at least represent a profit on that trade. Obviously, we'll have to get up through 67.15 to negate that, and I really don't see that happening at all. Dollar yen, horrible to trade last week as well, I will admit. We have a good trend line going back to almost the beginning of 2018, so it's almost a 2.5-year-old trend line. We spiked down, only dipped a little bit below that, and then recovered nicely. Now, that was on the Friday before, giving us an enormous bullish engulfing candle, and this is really powerful signal. We drifted back a little bit. I had another buy area down at 105.20. We didn't quite reach that, so it was a bit of a frustrating week, but I have to consider this as bullish still. So again, strength for the US dollar expected against the Japanese yen. 106.00, if we can get up through there, we should start the next leg higher, and 107.00, 107.40 area would be the next target. So good upside potential. Now then, the euro overran. I'll take this Fibonacci level off. This is not relevant now. The euro US dollar overran the 61.8% fib, which is at 188.22. Now we went quite a lot further than that. We went up as far as 119.15, but on the weekly chart in the last 2 weeks, neither week have we managed to close above there. So although this was a fake spike and very difficult, it does confirm a more negative outlook by the fact that we pulled back so significantly. Looking at the daily chart, we have a clear double top here. Not a bearish engulfing candle like we had the previous Friday. On that Thursday, but we did pull back. That's a doji followed by a big red candle. So this does look negative. Obviously very overbought, and to start the stochastic starting to turn lower, indicating a more negative outlook too. So this ties in very nicely with the positive outlook for the US dollar. US dollar versus the Canadian dollar. Now this is a bit more tricky to trade. We had good support level down at 131.80, 131.70. From the 200-week moving average. We didn't get down as far as that. We only got to 132.29. Now we've reversed. We've closed above the 100-week moving average, which is at 33.60. So that in itself looks quite positive for this pair. This isn't as clear, but it certainly backs up my theory that the US dollar can strengthen against this pair as well. We're back up through the 500-day moving average at 133.61. I'd say not as clear. I'm not going to go on to this too much because I think the other pairs would be worth trading rather than this one if you're looking to hold a long dollar position. Now, even gold is showing signs of strength in the US dollar versus gold. Very overbought on the weekly chart. New all-time highs, of course, last week. A real parabolic move. Almost panic buying in gold recently in the last 3 weeks. Definitely some shorts getting squeezed out there. Right, what have we got from Friday? Again, bearish engulfing candle. Now, considering how overbought we are, look how overbought we have been. Probably been some shorts out there getting caught just on trying to sell it into an overbought market. Very important bearish engulfing candle in significantly overbought conditions. We've deviated so far from the moving averages that a correction does now look on the cards. If you're long, it is worth getting out just in case we do fall, and then you've got some ammunition to buy in, because we will want to buy into this. This is not the end of the bull market in gold necessarily, but it does indicate a good correction. So this also ties in with my theory of a stronger US dollar. Even gold could see a correction against the US dollar. Worth mentioning WTI crude, struggling lately through July, not really making any significant moves to the upside. Just pushed a little bit higher in the first week of August, but as you can see, the 200-day moving average is working as resistance at the sort of 43.80 level. We got to 43.52, so we've topped just below there. This is a shooting star, which indicates some sellers coming in, obviously pushing prices back near the open on, what would that have been, Wednesday. So bulls not really tried to have a go, not really managing to get control. This isn't hugely negative. I certainly wouldn't be long. I guess the only position, if you need to have a position, would be to try a short, especially as we've rejected the 200-day moving average. Obviously, we weren't that overbought, but you could argue there is a negative divergence on the slow stochastic. So if you're desperate to put a position on in oil, I would suggest a short with a stop above, say, 44.00. Yeah, we could see some significant moves to the downside. We could see 38.50, which is the first 23.6% fib down there. I think you'd be pretty happy if you sold it here with a stop above 44, and we got down to 38.5. If you're trading the DAX, then I had us selling all last week in the sort of mid 12,700 area, sort of 12,750 area. If you were doing that throughout last week, you did really well on pretty much every day. Friday we didn't quite make it, but Tuesday, Wednesday, Thursday we certainly had an opportunity to sell, get short and take a turn. That worked nicely. As usual, Europe can't keep up with the US, which will not stop going up. So S&P, as you can see, continuing higher. NASDAQ hitting all-time new highs. No reason to sell into the US stock markets as far as I can see, unless the stronger dollar puts a break on the rally. But right now there's nothing from the chart telling me to sell US stock markets. Okay, that's it for the overview for the beginning of this week. Good luck.